It was a day of reckoning for UnitedHealth Group, one of the giants of the American healthcare industry. On April 17, 2025, the company's stock experienced a freefall, plummeting by as much as 22%. This marked the worst single-day performance for UnitedHealth since August 1998, a stark indication of the severity of the situation. The sheer magnitude of the drop wiped out a staggering $120 billion from the company's market capitalization, sending shockwaves through Wall Street and beyond. This dramatic plunge was not a solitary event. It was directly tied to the release of the company's first quarter earnings report for 2025. The numbers painted a bleak picture, falling short of analyst expectations and triggering widespread concern among investors. The report revealed an adjusted earnings per share of $7.27, which, while meeting market forecasts, was overshadowed by weaker-than-expected revenue figures. The company's revenue for the first quarter came in at $109.6 billion, a significant miss compared to the projected $111.6 billion. This shortfall in revenue, coupled with a downward revision of the full-year earnings guidance, raised serious questions about UnitedHealth's ability to navigate the increasingly complex and challenging healthcare landscape. The company's leadership acknowledged the gravity of the situation, characterizing the first quarter performance as unusual and unacceptable. The dismal first quarter results were not merely a case of missed targets. They exposed deeper systemic issues within the company, particularly concerning its Medicare Advantage business. UnitedHealth, like other major players in the healthcare industry, has been grappling with rising costs across the board. However, the company's struggles seem to be amplified by a confluence of factors that created a perfect storm, eroding its profitability and shaking investor confidence. Chief Executive Officer Andrew Whitty, in an attempt to address the concerns swirling around the company's future, admitted that the first quarter results were far from satisfactory. He attributed the disappointing performance to unusual and unacceptable cost pressures, particularly within the Medicare Advantage and Optum divisions. These two segments, considered to be crucial growth drivers for UnitedHealth, had become unexpected sources of financial strain. Whitty, while acknowledging the severity of the situation, expressed confidence in the company's ability to overcome these challenges. He emphasized that UnitedHealth was still experiencing strong growth across our businesses, suggesting that the underlying fundamentals of the company remained strong. However, the market seemed unconvinced by this reassurance, as evidenced by the sharp decline in the company's stock price. At the heart of UnitedHealth's woes lies a confluence of factors that have coalesced to create a perfect storm of rising costs. One of the most significant contributors to this pressure is the changing regulatory landscape, particularly concerning Medicare Advantage. Policy changes implemented during the Biden administration have resulted in reduced reimbursement rates for Medicare Advantage plans, squeezing the margins for insurers like UnitedHealth. Adding to the company's woes is the unexpected surge in healthcare utilization among seniors enrolled in Medicare Advantage plans. This surge, attributed to a combination of pent-up demand and an aging population, has strained resources and driven up costs for UnitedHealth. The company found itself in the unenviable position of having to cover more healthcare expenses than anticipated, putting further pressure on its bottom line. Another significant factor contributing to UnitedHealth's cost burden is the influx of sicker-than-expected patients inherited from other insurers exiting the market. These patients, who had low engagement with healthcare services in 2024, resulted in lower reimbursements for UnitedHealth in 2025. This unexpected influx of high-need patients placed an additional strain on the company's resources and further eroded its profitability. In response to the mounting challenges, UnitedHealth announced a series of measures aimed at mitigating the rising costs and restoring investor confidence. One of the key areas of focus is the company's Medicare Advantage business, where it plans to implement stricter cost control measures. This includes a more rigorous approach to managing healthcare utilization, negotiating lower prices with healthcare providers, and potentially raising premiums for some enrollees. Beyond Medicare Advantage, UnitedHealth is also taking steps to optimize its operations across the board. This includes streamlining its administrative processes, leveraging technology to improve efficiency, and exploring strategic partnerships to enhance its offerings and reduce costs. The company is also placing a greater emphasis on preventative care and disease management programs, aiming to improve health outcomes for its members while reducing the need for costly interventions. The road ahead for UnitedHealth remains uncertain. The company faces a challenging operating environment characterized by rising costs, regulatory uncertainty, and evolving consumer expectations. However, UnitedHealth's vast resources, market dominance, and commitment to innovation provide some reassurance that it is well positioned to weather the storm. The coming quarters will be crucial for UnitedHealth as it seeks to regain its footing and demonstrate its ability to deliver sustainable, long-term growth.